Has Bitcoin bottomed? Good evening, ladies and gents. Welcome back to Compound Interesting. In today's video, we're going to go through some research from Arthur Hayes and his theory on why Bitcoin has potentially bottomed at those lows of like 15,800 a while back after the FTX collapse. So this theory is kind of predicated on the idea that the forced selling has come to a stop on Bitcoin and maybe Ethereum specifically. So what happened? What led to Bitcoin's collapse from 69,000? So when interest rates started going up and the market started going down, lending companies like Celsius, BlockFi, and even FTX, they had been giving loans to these really professional top tier trading firms such as Alameda and 3AC. So these trading firms were implementing net neutral positions, so they were doing just arbitrage plays, they were doing net neutral positions, so no matter which way the markets went, they would make money. But in reality, 3AC, Alameda, and all these other top tier professional trading firms, they were just degens. They were just degens like me and you, and they were just margin long. They were just max longing shit coins and Bitcoin. And so 3AC was the first one to blow up. So when interest rates rose and Bitcoin started going down, 3AC had a massive long position on Bitcoin from that they would get liquidated at 25,000. Of course, Bitcoin eventually hit 25,000. 3AC got liquidated, and from there, just cascade of liquidations of all these, net neutral trading firms who were just complete degens and were just long everything. So what happened when 3AC blew up? The likes of Voyager, BlockFi, Celsius, they had all been giving loans to 3AC. And so what did 3AC when these companies were like, oh, you owe us all this money, you better give us our US dollars back, we want our money back. So what does 3AC do in that situation? They start selling their Bitcoin because Bitcoin is the first thing, it's the most liquid asset, so it's the first thing you'll sell. So for example, if I have a load of shit coins and I'm a huge firm and I have billions of dollars worth of shit coins, if I go and try and sell those shit coins, the price impact of those shit coins is going to drop significantly. But if I try and sell a couple of $1 billion of Bitcoin, the price isn't really going to be impacted all too much. So the first thing you're going to sell is Bitcoin. So before these companies went bankrupt, before they blew up like 3AC, Celsius, FTX, they would have been selling their Bitcoin aggressively to be able to try and not have to go bankrupt, to be able to say, oh yeah, we can pay you back, here's the money that you're owed. So what Arthur Hayes is suggesting is that before the likes of Celsius or Voyager or 3AC went bankrupt, they sold all their Bitcoin, and now that they are in bankruptcy, they still have some assets on their balance sheet, but it's probably all just shit coins. So basically, once those bankruptcy proceedings go ahead, the only assets left on the balance sheets of these bankrupt companies that will be distributed to the creditors. So anyone who had money in Celsius like myself, had half a Bitcoin in there, I could probably get a few cents back. But anyway, so basically what this would suggest is that Bitcoin is in a better buying opportunity than other shitcoins at the moment. And even without this data, it's probably a better idea to be buying Bitcoin than shitcoins, in my personal opinion, at this moment in time. Similarly, it was not just centralized lending platforms that have had to sell Bitcoin aggressively over the last few months. It was also Bitcoin miners. So Bitcoin miners took massive loans. They took massive loans against their actual mining equipment and against their Bitcoin holdings, because they don't want to sell Bitcoin. Because if you're a Bitcoin miner, you want Bitcoin's price to be as high as possible, so you'll make as much money as possible. So if you sell Bitcoin, that could actually bring down the price of Bitcoin. So you don't want to sell your Bitcoin. You don't want to sell your Bitcoin to expand your operation. You want to just take out loans to expand your operation. But because Bitcoin's price is so low now, and the creditors are wanting their money back from these Bitcoin mining companies, they've had to sell Bitcoin at low prices, and they have to sell a lot of Bitcoin instead of just a little bit of Bitcoin, because Bitcoin price is so low in US dollars. Like, their loans are denominated in US dollars, so they owe a lot of US dollars. So if they sell more Bitcoin than they would have had to at 60,000 to be able to fund their electricity costs and fund their liabilities. and a few Bitcoin miners have already gone bankrupt. So you can see from this chart the Bitcoin net position change for Bitcoin miners. Like red means they're selling more Bitcoin than they're accumulating, and it's been really heavily red as of recently. It hasn't been that heavily red since the Bitcoin bull market first took off. But who was giving these loans to the Bitcoin miners? It was, of course, the centralized lending platforms such as Celsius and Voyager. And because they've gone bankrupt, there's no more miner loans that have yet to be liquidated. Okay, so the final cohort of people who have gotten liquidated or have had to be forced sellers of Bitcoin recently was of course degenerate traders who were max bidding and max longing Bitcoin. So they were using leverage to buy Bitcoin when Bitcoin was going up, and now that Bitcoin's price has turned, they've been turned into forced sellers. So how can we prove, or how can we see that the amount of leverage in the system has been wiped out or dropped significantly? So we can see from this chart, the orange bars is the open interest. So that's essentially the leverage in the system at this moment in time. And you can see right now we're at lows. We're at the same kind of leverage or open interest that we were at the start of the 2021 bull run, or just after the first Bitcoin crash in the summer of 2021. So when open interest is low for Bitcoin, that means the volatility is also going to be a little bit lower than usual, because leverage greatly enhances the price volatility of Bitcoin. So if loads of people are longing, Bitcoin's price is going to go up. But if Bitcoin's prices starts going down and there's still low longs, they'll start getting liquidated, and there'll be cascades of liquidations leading to more volatility in each direction. But at the moment, I'd say most of the open interest is actually in short positions. So that's always kind of a good thing, because it means it can go quickly the other way. If Bitcoin starts turning the other way, all of them will cut their losses on their short positions or just get liquidated. But regardless, the open interest is quite low in comparison to historical averages for Bitcoin. So given these three cohorts of forced sellers have run out of Bitcoin to sell, like who's left to sell Bitcoin? Like anyone who's bought it at 10,000 a few years ago, like if they haven't sold yet, why would they sell now at 16,000? That's kind of the idea that Arthur Hayes is putting forward. There's no more forced sellers. So if you're in Bitcoin for this long, why would you sell at these prices if you believe it's going to go to enormously higher prices over the coming years? If you've been, like most of the people left in Bitcoin now are long-term holders, so there's just not much reason to be selling at these prices. And finally, Arthur Hayes wraps up the conversation or the article by saying that he believes that the Fed will break something in 2023 by raising interest rates. Or by just having these elevated interest rates. So they'll break something and they'll have to U-turn and they'll have to print money again, which will lead to a spike higher in Bitcoin, which we would all like to see. But personally, I think it's going to be a couple of years before Bitcoin really enters a new bull market, but we'll see what happens. Buying Bitcoin at these prices, like for Bitcoin's price to go much lower than 15,000, we're going to need some new forced liquidations. We're going to need a seriously heavy recession or inflation to go spike back up and the Fed to really hammer down interest rates. We're going to need some new catastrophe or a nuclear bomb going off or something like that, in my opinion. And all of those things could happen. But regardless, Bitcoin at these prices over the long term is probably a very good investment, in my personal opinion, not financial advice. Come up with your own conclusions in regards to that. So thank you so much for watching. I really hope you learned something. I really hope you enjoyed the video. Cheers.